We are late.
Okay, okay, Lakshmi, you can start.
Tactics without strategy is a noise before defeat. Good evening, everyone. I am Lakshmi. Welcome to the day 4 of Smart Approach to CA exams. Before we proceed with the session, I take this opportunity to welcome all of you to today's program. As a student, I vouch and also recommend that everyone has to see the Smart Approach session because over the past 3 days, I have gathered a lot of tips and tips that would help me to approach the exam better. I now request the co-opted member of Sikasa Bengaluru, CA Manjunath sir, to welcome our speaker. Over to you, sir.
Hi, good evening, everyone. Beloved Dr. V. Rajesh Kumar sir, CA Sudeep sir, co-opted member of Sikasa Bangalore, and then dear Lakshmi Shenoy, Sikasa members, and all the attendees, student attendees. It's my proud privilege to welcome you all to this Smart Approach series. And then today we have an eminent speaker and then a speaker of international stature, Dr. V. Rajesh Kumar, sir, who is my guru also. Uh, yeah, Dr. V. Rajesh Kumar is an MCOM graduate from Bangalore University. He has got his doctorate in the area of strategy. While accounting and taxation are his areas of expertise, finance is his area of passion. He has over 28 years of experience in teaching at graduate, postgraduate, and professional levels and has served various institutions in different capacities like Mount Carmel Institute of Management, Bangalore University, Department of Commerce, and Alliance Business Academy, to name a few. He is a faculty for strategic financial management and tax laws at Bangalore branch of Institute of Chartered Accountants of ICAI. He has authored a book on financial management and indirect taxes for the requirement of professional courses and co-authored textbooks on accounting, finance, and taxation for the requirements of various universities. He has presented papers at various national and international conferences and has published articles in reputed journals. His paper on capital assets pricing model, CAPM model, was selected for an international conference at Harvard University, Cambridge, United States of America during May-June 2011. Dr. Rajesh sir is also has a rich experience in research, consultancy, and training, both at the academic level and corporate level. He has conducted student development programs and faculty development programs in various educational institutions and has conducted training programs for executives and managers of various companies like Wipro, Godrej, FCG, Honeywell, KPCL, Forest Engineers, Triveni Engineering, Tyco Electronics, etc. in the areas of accounting, finance, and taxation. He is associated as the resource person for the finance for non-finance executives program of the Bangalore branch of Institute of Chartered Accountants of India. He is the founder of Vittam Praveena Gurushala, Finance Expert Academy, an academy engaged in spreading the knowledge of finance to students, faculty, corporate, and all others interested in the area of finance. Presently, he is working as a finance and academic consultant and has visits different management institutions for teaching finance courses in and outside India. With this brief introduction, I present before you Dr. V. Rajesh Kumar, sir, and then the floor is yours, sir. Thank you so much.
Thank you, Mr. Manjunath. Thank you for your kind words. Am I audible?
Yes, sir.
Yes, sir.
Okay,
Yes, sir.
Okay, thank you. So, good evening to Mr. Sudeep, Mr. Manjunath, Ms. Lakshmi Shanai, and all the student participants for this in this program. At the outset, I congratulate and appreciate the efforts made by SICASA, particularly Bangalore branch. I remember from past few years, this is one initiative that is being conducted, and I myself, I think 2 occasions, I mean, I've been part of this initiative, and my experience being part of the earlier 2 programs, all those participants felt immensely benefited because they could get an idea what exactly to be doing and how exactly to approach the exams. Because one concern for any CA student is getting in is easy, but going out is always a matter of constraint, and unless you're completely prepared, adequately equipped for it, obviously your efforts are not, I mean, you may not be able to achieve what you wanted to. And as I said, thanks to Bangalore branch, SICASA, for this lovely initiative to ensure students get good insights, some ideas, some, as Ms. Lakshmi was saying, some tips and tricks for how to face exams. Friends, today I have 2 agendas. One second. Yeah. One, for CA intermediate, this paper, Financial Management and Economics of Finance, but economics is not my forte. I don't think I may be able to give you good insights on that. But financial management, what is exactly the coverage? From exam perspective, what is essential and how should you approach learning? What is the depth? What is the coverage? Let's discuss every aspect of it. By the end of it, if you go with our suggestions, to a very great extent, you should definitely be able to get a good insight, and you should definitely be able to prepare better for your requirements. Second, in fact, I would like to spend more time on this. For CA final, strategic financial management, which is a full paper, and quite often this is one very wrong notion among students. This is one difficult subject, but trust me, friends, it's just a matter of time we will understand how it is and how simple it is. But once we make a beginning, we will understand what is to be done. Before I begin, I'll just pose a small question, and there's a purpose behind this. And this is a very, very common question to come across, but 99% of the times, this is one question for which I don't get correct answer, or I don't get answer at all. Now, I'll pose the question. Maybe by the end of the session, I hope and presume that definitely some of you will be able to give answer for this. And this question has a very interesting insight in it, and especially for those students pursuing CA, this has a big role to play. Let's say 3 friends meet and they think of having a cup of coffee. They search their pockets. Each of them have 10 rupees in their pocket. So they pool. So 3 friends, each of them pool 10 rupees. Remember, 30 rupees. Then they go to a hotel. Let's order for 2 coffees, 2 by 3. The bearer serves them. They have the coffee. And when they ask for the bill, it is 25 rupees. And remember, each of them have pooled 10 rupees. So 30 rupees they have. They 25 they settle. They give the bill. When the bearer gets the change, he will be given 2 rupees as tips. So 25 rupees towards coffee, 2 rupees tips. What is the balance? 3 rupees. Each of them take back 1 rupee. Each of them take 1 rupee back. Now, let's think what happened. Each of them contributed 10 and received back 1 rupee. So what is the net contribution made by each person? 9 rupees, correct? They contributed 10, got back 1. So 9 rupees the net contribution. So 9 into 3, 27. 2 rupees tips, what has been given to the bearer. What's the total, friends? 29. But we started with 30 rupees, right? Where did the 1 rupee go? Now, I'm sure this is not the first time you are listening to this question. You would have come across this. And if you know the answer, as I said, there's very interesting purpose behind this. Friends, It appears simple, but we struggle to understand what exactly would have gone wrong and where is this 1 rupee. And that's exactly the same struggle what we find in CA. You know everything, but somehow you're not able to deliver, or somehow you don't realize what's going wrong. For simple reason, friends. Unlike other programs, CA is supposed to equip you not only with a qualification, but more important, with knowledge and skill for your career. But friends, unfortunately, and this is one big gap I find, I've been teaching for CA from 1998. That is my association with Bangalore branch of ICI, 23 years. And over the years, especially, this is what I have seen, friends. Focus is more on exams. Hardly few are interested to learn the subject. Otherwise, most of them want to know the subject just for exam sake rather than for learning sake. And that's exactly where it matters. And foundation, for sure, since you put good efforts and since there are a lot of academies which rigorously coach you, you clear it. Comes to intermediate, saying that the standards are not very high, yet it's any day higher than any other course for that matter. Yet with some efforts, you will be able to clear, but this is where quite often the gap exists. And those who clear intermediate struggle very much to clear final. And I know many students, wish and hope the same won't happen to you, but I know many of my student friends, past 8 years, they're still giving exams. And very lately they realize what is a mistake in their approach, what mistakes they're committing and how they're going about. And when they rectify and they correct it, yes, they do clear it. So when I was asked to give an orientation and smart approach for CA exam, friends, smart approach, hard approach, call it anything, the only approach, the best approach to ensure you're equipped for giving CA exams and come out with flying colors is learn the subject and learn with passion, learn with purpose. And the purpose should not be just passing the exam. Purpose should be to see that you get complete, deep, thorough knowledge of the whatever subject and also acquire the skills which the subject provides you. And hope you realize, friends, finance is not just a subject for you to write and pass in the exams. This is an area in which you can make huge career, huge, very big career, trust me. And though most of you would like to have expertise in accounting, taxation, Ind AS, IFRS, excellent. But my feeling, I may be wrong, all these are domains which is highly saturated. How many of you fresh can make a very good career in all this? You might, why not? Definitely, but also a lot more. But finance is one area where the requirement is very huge. Requirement is very huge. And companies, they're not getting people equipped enough to meet the requirement. Even though they would like to have a chartered accountant, they're compromising with a MBA because CAs are not going with adequate finance knowledge. They have only exam knowledge. And this is where the difference is. So the best approach to ensure you do well in finance paper is to see, first to learn it completely, adequately, properly, and in the way it has to be learned. So how to go about learning finance? What is there? And particularly the CA intermediate, what is the coverage and the depth? Let us see one by one. And I'll display many things here. Have patience, follow every aspect carefully. And if you can go with what I suggest, to a very great extent, friends, exam should be a cakewalk, and exam is not at all a consideration. This is not at all something you should really worry about, something beyond. And if you can equip yourself adequately at intermediate level, trust me, final is very, very simple. Take my word, hardly need to put efforts. That just because we don't have right foundations, we see students struggling at the final level. So let's see what is required? Firstly, friends, this for intermediate. Earlier it was called IPC, now it is intermediate. To learn finance, first and foremost, you should be equipped with certain prerequisites. And without the background of this, finance may not be easy, or you may not get the right flow to learn the subject. So what do you need? One, a brief basic background of financial accounting, and how much, if you have the knowledge of how to prepare financial statements enough, the entire process, right, from journalizing till trial balance financial statement. In fact, when the preparation actually don't have a need, what we need is knowing how to read financial statement, which is from where financial management begins, which I'll orient you. But this one background you need, and considering that all of you, this is your major strength, this is not a constraint, you definitely would have good knowledge, but ensure firstly you have. So if you feel accounting, the basic concepts have some clarity, I'm not very clear, my suggestion, please first ensure you have strong foundations in financial accounting and then begin. Two, there are certain mathematical concepts which you must know. What exactly? In my later slides I will show you. And without that, finance is not something you can really understand. And what exactly is that? Why it is relevant? I'll tell you just a little later. And the third aspect is statistics, but at intermediate level, very basic knowledge. And don't you forget, all these are something which have been equipped at the very foundation level. See a foundation, and those are not done foundation in their undergraduation or whatever, definitely would have been exposed to all these topics. So your first requirement is this. Now, what is that you need in mathematics and statistics? I'll tell you as I progress further. Now, first, these are the prerequisites. Only when you feel, yes, I have adequate knowledge on this, we can proceed further. Now, what mathematics you need, what statistics you need, I'll just tell you. But first, let me show you what is there in this finance curriculum. Friends, whatever the curriculum prescribed by the institute broadly can be classified into 5 topics. These are 5 broad categories of finance. Why it is so? Again, you'll understand. Introduction and foundations. What do we have in it? I'll tell you. Long-term financing decisions, long-term investment decisions, short-term financing, short-term investment decision, dividend decision. These are the 5 topics. Now, firstly, introduction. What do we have under this? And this is firstly what you have. And I'm first giving you the weightage. So scope and objectives of financial management, analysis of financial statements, and introduction. This is the mathematics I mentioned. You must learn time value of money, which you would have been exposed to at the foundation level itself. Yes, you have come across. But please ensure. And what all you should know, I'll tell you. Now, friends, for this, the weightage is 10% to 15%. Now, from where am I getting this weightage? Friends, Institute had issued when new scheme was introduced. When the new scheme was introduced, Institute issued this document, came up with this document, section-wise weightage for subjects under the revised scheme, the new scheme. And whatever I'm mentioning, the weightage is essentially taken from this and also from past exam papers. We'll also display in few minutes the analysis of past exam papers, you will understand. So this is section-wise weightage for subjects under revised scheme, and for every subject it is mentioned, and financial management. Can you see financial management? So there's a clear mention. All this is available. This document is available in the institute website. You can later download and take a look at it. You will see. So this weightage, what I'm showing, is basically from there. Now, what is there in the first category? Introduction is what I said, and the scope. Friends, it is for this you should know financial statements. So when I say the first prerequisite, financial accounting, in particular financial statements, please remember, friends, financial management is nothing but managing financial statements. That's it. As simple as that. So unless you have right background of financial statements, you can't understand how to manage them, correct? And what does financial statements include? As you're aware, currently keeping a company in mind, and usually finance, what we learn is most of corporate finance. So we have statement of profit and loss, balance sheet, statement of changes in equity, cash flow statement, notes to accounts. These 5 are what we call as financial statements. And please ensure you remember this, friends. Whenever ask students what does financial statements include, unless all these 5 are mentioned, it's not complete. And I hardly come across students mentioning all the 5. All these 5 together are called financial statements. And what we have, statement of profit and loss. I'll not go into the details of the formats. All this you know well. Balance sheet, liabilities, assets. Now, I repeat, financial management is managing financial statements, essentially managing balance sheet, because whatever is the outcome of income statement, the outcome, the profits, retained earnings, finally will also find a place in balance sheet. So if you manage balance sheet, indirectly we're also managing income statement. Now, what is there for us to manage? So if financial management is managing balance sheet, what is there? Friends, as you know, liabilities, which you know, nothing but sources of funds. And sources broadly, we have 2 categories: long term, so whatever are violated, shareholders funds; non-current liabilities, the borrowings, long-term borrowings is long term; current liabilities is short term. Similarly, assets, non-current assets, which is long term; current assets, short term. So what should we learn? Friends, all that we should learn is, one, where to get long-term source of funds from. So financing, long-term financing, capital structure decisions, which we'll discuss in elaborate. And this long-term funds which we procure, what do we do? Invest in what? In long-term assets, short-term assets. And when it comes to making long-term investment, how to make decisions? The long-term investment decisions, capital budgeting. So managing balance sheet involves making decisions regarding long-term financing, long-term investing. Long-term financing is nothing but financing decision or capital structure decision. Long-term investment decision, nothing but capital budgeting. Similarly, we have for short-term requirement, where to get the funds and how to use that funds. So current assets, current liability, and you are aware, short-term is nothing but working capital. So that is another requirement. But to put in simple terms, balance sheet tells us how to make, or it involves making financial decisions, financing decisions and investment decisions. It may be long-term or short-term. Financing decision, investment decision. So when I say scope of financial management, what does it involve? One, it involves financing decisions, how to decide which source of fund to get funds from, and investment decisions, and it could be long-term or short-term. But in addition to this, there is one more very interesting decision. You are aware, when a company or any business entity makes profit, there's one decision it has to make. Out of this, how much to distribute as dividend, how much to retain and reinvest in business. And this dividend, how much to give as dividend, how much to retain and reinvest in business is another major thing which has a big influence on business. And this we call as dividend decisions. Dividend decisions. Friends, this is what we call as scope of financial management. So this is the first requirement, scope, and getting an orientation. So if we have a correct background of financial statements, you'll understand what exactly we should learn. So this particular chapter 1 in your curriculum gives you what exactly we do, which is nothing but financing decision, investment decision, dividend decision. But friends, what you must know is not just these decisions. As a background to these decisions, what you must know is reading financial statements. As chartered accountants, you are engaged, you prepare financial statements. But friends, financial statement today, a accounting package will prepare. Just input the data, click of a button, you get it. So we don't need a commerce graduate, a chartered accountant to prepare this. But what is essential is, friends, knowing how to read financial statement, how to elicit information from that, how to make decisions using the information there, how to understand a business entity from financial statements. And this is an exclusive topic you have, and this is something you must master, because when you say you're a chartered accountant, a professional, this is one minimum thing that is expected out of you, that you should be able to read financial statements. And though there are many techniques, the best technique is something called ratio analysis. And in that, there is a model called DuPont model. Friends, knowing this is the requirement. And as I said, there's a very good coverage, particularly ratio analysis. Very interesting variations in questions are found just to ensure you know everything about reading financial statements, you know every aspect in financial statement, and the best way to understand that is using ratios and ratio analysis. And there's a model called DuPont model. In our curriculum, it's just a passing by reference, but please take my word, this is such a wonderful model, ultimate model. And just by keeping that, just by using that, sitting in your place, you can identify what problem a business entity has, which are the problem areas of a business. Just apply this model to annual report of a company, you can identify. That's simple but powerful. You must learn it. And when I say you must, is it because exams need it? Firstly, yes, exams as a requirement, but as I said, exam is not the only criteria for us to keep in mind. It has a requirement much beyond. And this is what gives you practical knowledge on what is expected from a chartered accountant. So, scope and objectives. Scope is about the 3 financial decisions, but our requirement is to understand how to read financial statements. So this is the chapter which you have called ratio analysis, analysis of financial statements. But if you remember the prerequisites, I said financial accounting. So these first 2 is what you can do a good job only when you have proper background in financial accounting. But I did even mention mathematics of finance, time value of money, and what exactly you should know in time value of money. I'll show here. Friends, you should know how to find something called future value, present value, annuity, perpetuity, growing perpetuity, etc. All this, I'm sure you are clearly aware of the terminology and you learned it at the foundation level. Relearn it, because 90% of the formulae, whatever you have in this subject, you find a lot of formulae, lot of formats. Formats is everything extracted from financial statement. It is something in connection with that. But most of the formula, whatever you have, is based on time value of money. Take my word, you don't have to by heart any formula, friends. If you have the background of time value of money, you can give the formula yourself. And these, for intermediate level, the coverage is very huge. But if you can ensure you learn this much, good enough. So this is what you need as part of first topic. So when I say coverage, part 1, introduction and foundations, then this is what you need. And as I mentioned, this has a weightage of 10 to 15%. And this weightage, as I said, is firstly from the instruction guideline issued by the institute regarding the weightage in exams for each topic, and also from based on past exam papers, which I'll show the analysis in few more minutes. Friends, the second topic, the second category is, as I showed you from the balance sheet, long-term financing decisions, which is what we call as capital structure decisions. Capital structure decisions. And as you know, what is there in capital structure decisions? Friends, broadly you have 3 things. Firstly, from what sources can we get long-term finance? So a complete knowledge of all sources of finance, the modalities, the intricacies, the limitations, how to procure it, the mechanism, everything you should know. But where you should give more time is how to decide what should be the best capital structure for a business entity. You know what a capital structure means? Capital structure is about deciding from which sources how much to procure, from which source of funding how much to procure. Now, how to decide that? So that is your another major topic. That's another major weightage. And you are aware there are 3 criteria for this. 1, benefit to owners, which is a capital structure which gives maximum benefit to owners. And as a part of this, you should learn something called EBIT EPS analysis. All this you would have learned the working problems, but understand the connect. The second criteria is, which is the capital structure which is the lowest cost of capital. What is cost of capital? In simple words, the rate of return company is giving to those who are given the funds. So all those who contributed funds was the rate of return we give. Obviously, the return what we must give should be as low as possible. So that's another criteria. But most important, another criteria was the risk in the capital structure. It's called financing risk. So this risk exists when we borrow. When you don't borrow, no risk. But when we borrow, there is a risk, which is what we call financial risk. And this is another criteria based on which we design capital structure, because risk is, every management has its own policy towards risk. Some of them are risk averse, some of them are risk takers. Even the capital structure should match with the risk policy of the company. So we should know how to measure the risk. And this is what we do with the help of something called leverages. And friends, this has a very good presence in the exams. I'll show the analysis in a few minutes. Financing decisions itself has a very big weightage. And in that particularly, this EBIT EPS analysis, cost of capital, leverages as a major weightage. And all this is part of long-term financing decisions. But in addition to this, friends, we have something called capital structure theories. These are some theories, some models propounded by some experts regarding how the capital structure should be. Now, today's context, most of these theories are irrelevant, doesn't make any sense. But finance evolved with these theories, so you should have knowledge. So there are 4 theories: net income theory, traditional theory, and these 2 theories are called as relevant theories. And net operating income theory, MM theory, Modigliani Miller, they're called irrelevant theories. They're called relevant and irrelevant because these 2 theories, the last 2, say capital structure has no influence on value of the company. You're aware, the major goal of any business enterprise is value maximization, wealth maximization. Now these 2 theories, the last 2 say, whatever the capital structure, value is not influenced. Value will be same. So capital structure is irrelevant in achieving the goal. That's why, that's what these 2 theories say, and they are called irrelevant theories. But the first 2 theories state that based on your capital structure, the value also can change. So capital structure is relevant in achieving the goal of business enterprise. But this is another topic you should learn. Also again, good weightage. What is the weightage? I will show you. Now this is the second broad topic you have to learn. And this is one topic you have to give maximum weightage, maximum time in preparation. And I can show you later, considering that I'm discussing for CA students. I didn't want to bring too many practical things, but lot of studies, lot of papers, lot of articles, lot of research on how companies make capital structure decisions. And you will see what you learn in classroom, what happens in boardroom is exactly the same. So if you learn the way it has to be learned to the complete depth, friends, are very close to what industry needs. And that's exactly what is expected when you call yourself a professional. Then the third broad category of topic, and as I mentioned, friends, for this the weightage is around 40%. You know, out of 100 marks, 70% is this, but with choices, the total marks will be more, and 40% of that will be on this. I'll show specific analysis just a few minutes later. And the third major topic is long-term investment decisions, which you call as capital budgeting decisions. First, I'll show the weightage. Friends, this is another topic which has another big weightage, 40%. Mind you, financing decisions, capital budgeting, and long-term investing, put together 80%. I mean, 20% is all other topics. But once again, it's not from exam perspective, though I'm giving that weightage just to ensure that you give adequate time. This is another decision which any company has to make very carefully so that they don't falter in managing the business. And this is what we have. Now, what is capital budgeting decision, long-term investment decision? It involves making 4 types of decisions. When there is an investment opportunity, should we invest or not? Different alternative investment opportunities, but if you can invest in only one, which one is the best? Different investment opportunities and you can invest in more than one, then how to allocate funds in each of them? It's called capital rationing. And even not only when to invest, when to come out of investment, capital disinvestment is also part of this. Now, this is what you call capital budgeting decision. And how to make this? Since it involves firstly identifying certain inputs. If you have to invest, how much is the outflow required? And from the investment, what is the inflows? And for making decision, what should be taken as hurdle rate? All this you learn as a part of the topic and specific discussion. And with the help of these inputs, applying certain techniques, we should learn how to make the decisions. And all these techniques are broadly classified into non-discounted and discounted cash flow techniques. But what is interesting is, friends, in the new scheme introduced 3 years back, they included, and very logical, very sensibly, they included 2 more topics: risk analysis in capital budgeting. What is this about? This capital budgeting decision, what we make, is based on forecast. Correct? If I invest in asset today, year 1, what will be the inflows? Year 2, what will be inflows? Year 3, what will be inflows? Till the life of the asset, what can we expect? So we forecast and make the decision. But can the forecast be always accurate? Can the forecast be always correct? Impossible. So if you make a wrong forecast and make a decision based on that, all chances it may have a negative impact on business. So since it is based on forecast, there's a risk involved in your decision. How to take care of the risk? So in the capital budgeting decision that you're making, first of all, is there a risk? If so, how much is the risk? And how to make a decision considering risk, involving risk, including risk, how to make the decision. Now that is what we learn under risk analysis in capital budgeting. Very exciting, very, very interesting. And this is something which is value addition over and above what we learn at undergraduate level. Because most of the topics what we have mentioned, discussed earlier, most of them you learnt it, but not everything. And this is exactly where it differs, especially this. Then another topic that has been part of long-term investment decision is lease financing. When a business needs an asset, not all the time it may have to buy it. It can even take it on lease. But how to decide, should we buy the asset or take the asset on lease? That's what we learn. Or there are businesses which gives asset on lease. If so, how? When this business is beneficial, or what rent if we charge will it be feasible, etc. So from both perspective, lessee perspective, lessor perspective, but it's an extension of capital budgeting. And as I said, all these friends 40% weightage. So introduction and scope, long-term financing decisions, long-term investing decisions. Next comes short-term financing and investment decisions. So what is this short-term? For day-to-day requirement, how much funds we need, from where to get, how to use it. And this is not what we call as working capital management. Now, what do we have to learn in working capital management? Friends, working capital management involves basically 3 things. Firstly, estimating how much funds we need for day-to-day working. Estimating the funds. 2, identifying from what sources we can get the funds. And once we estimate and procure, deciding how to finance the working capital. That is, how much from long term, how much from short term, etc. And this is called approaches to working capital financing. And once you allocate, you invest the funds for day-to-day working, then how to manage the various components. And what are the components of working capital? Nothing but all the components of current assets and current liabilities, essentially receivables, inventory, cash, payables, how to manage each of them, how to account for it. Now, usually we call this as 5 A's of financial management. Anticipate how much funds you need, acquire the amount of funds required, allocate it, administer it, and account for it. So that's exactly what we should learn as far as working capital. And as far as how to estimate, very exciting. And again, that's one area where you can always expect very interesting problems in the exam papers. And again, very good weightage around under 10 to 15% of the paper is always on working capital. And while estimating is one part, from where to get short-term funds, common sense will tell you, but we always have a very good, material compiled for that matter. But what is most important is once working capital has been invested, working has started, how to manage each component of working capital, which is receivables management, inventory management, cash management. So what are the, why should we manage it? What are every aspect, whatever is required, I put it. I will share this material with the organizers. In turn, they can send it to you. And this will summarize what exactly you should learn as a part of working capital management. So this is working capital. And lastly, you have dividend decisions, which I mentioned earlier. As a business entity, as a company, when it makes profits, how to decide how much should be how much of profits should be distributed as dividends, how much should be retained and reinvested. Now, companies have their own methods, but there are many theories, many models that has been suggested for how a company should make dividend decisions. And these three are very popular among them: Walter's model, Gordon's model, MM theory. And again, these two, Walter and Gordon, are called relevance theory because these two theories say how much dividend you pay will have an influence on the value of the company. If you pay more dividend, value may increase, less dividend, it may increase, something. Each theory is its own suggestion to make. So this says how much should you pay as dividend so that value can be increased, value of the firm can be increased. And that is always the ultimate goal of a business enterprise. So this is something you should learn. Very simple theories. And most of the time, it's problems what you work. But I always suggest problems is easy, matter of time. But understand the background of it, it's then you will understand the practical relevance. And irrelevance theory, MM theory says, whatever dividend you pay, value is not influenced. And it gives a proof how whatever dividend you pay has no influence. And most of the exam papers, past exam papers, questions on dividend is based on MM theory. Of course, there are questions on everything, but question on this, which shows prove whatever dividend you pay, value is the same, value is not affected. So what are the proof shown by MM theory is something you'll be reproducing, but this is another topic. Generally, the weightage is 5%, friends. Now, let me show you now the analysis of past exam papers for CA intermediate. This is as per new scheme. Old scheme was almost same. It was for 50 marks, and the 50 marks was cost accounting. And some of the topics what you know was not there. Now it is made 70 marks, so some additional topics have been introduced. What I'm showing is for the new scheme, all 5 papers till date. Remember, May 18 was the first batch where new scheme started. From the time it started, every single paper, this is the analysis. All this I'll be sharing. You can see. I'll also show one link later. I put it there. You can even download it from there as well. So firstly, these are the 5 headings and all these are the topics under each. So these titles is what you find in your study material. These are the exact topics. So introduction, which includes scope and objectives, ratio analysis, time value of money. Time value of money actually is from exam perspective, it doesn't exist. You don't have questions, but you should know. In Jan 21, 9 marks, but long-term investment decisions, can you see 40 marks? Long-term investment decision 17 marks. Working capital 9 marks. Dividend 5. Actually, this exam Jan 21, there were a lot of choice questions given, more choice given. So it is totally 80. Remember, out of 100, 70% is for finance. But which choices it is 80 marks that has been given. This is what you see. Okay? This is Jan 21, and please see the weightage. And these two put together 57. Now, if you go to November 20, same. You can see, and again the coverage out of 72, 48, that is 2/3 is on this remaining. So if you go to November 19, 47 marks out of 74. Though don't neglect other working capital, everything, and from which topic, how many marks, you can see the analysis. Similarly, May 19, November 18, May 18, every paper. I will make this available to you. I'll also show the link where you can get this. You can download it, or it will be sent to organizers. You can collect it. Please ensure you go through that. Now, this is what you have for intermediate. But friends, coverage is very logical. As I mentioned, this is one subject which is very practical and something very realistic. When you learn accounting, how many of those accounting topics you learn are realistic? Internal reconstruction, amalgamation, absorption, though it happens. What you do in classroom is not what actually is required there, correct? But when it comes to cost management, financial management, etc., what you learn is what actually happens. As I said, I can show you a lot of research works which shows how financial management is made in companies, which company, what they do, everything you can identify, and this is the requirement. Now, those who are strictly thinking only from exam perspective, friends, learn for exams. That's good. Definitely, that is our first goal, first requirement. But please ensure you learn with the foundations, with the basics, and somehow I always see as students, any foundations, any basics, any concepts, you say theory we don't need, problems we need. Friends, all that is very immature. Definitely that's not how it works. As I said, you may pass for various reasons. You may have done well in the exams because you have, but when it comes to later level, the final level, you realize you don't have strong foundation to understand the subject. So please ensure you understand the concepts, understand the foundations, and then take it further. You will see everything will be easy. And when it comes to final preparation on subjects, you don't have to take much time. You can focus on learning in your do good justice for your articleship, because that's where you pick up what you need to make a career, and all these can add to that, and your experience can add to your learning of the subject as well. But foundations is essential. This is an opportunity. Now, this is the coverage for intermediate, and this is the weightage, and these are the topics. And from exam perspective, please give more weightage for long-term financing, long-term investing decisions. And which topic under that you can't generalize, because everything there is important. From every topic there have been questions, so can't pick and choose, but give more time for that. But don't ignore the others. Others also ensure you give adequate time and prepare. When it comes to allocating time, obviously you should allocate more time for long-term financing decision, long-term investment decisions. And there are excellent material available, no dearth for books on this. Study material is excellent. In addition to that, the RTPs that is given, the past exam question papers, absolutely good. You can definitely make use of them. But just to mention, this is my textbook for financial management, published last year by McGraw-Hill, and this you can find in any Amazon, Flipkart, anywhere you can buy. This is just one source. I'm not recommending you should buy, but this everything from study material, from practice manuals which existed earlier, from RTPs, from exam question papers, you can find everything available. And friends, if you later go to this website, this is my website, and in this page here, if you go to resources for CA intermediate, all RTPs and all past exam question papers with suggested answers. Now, for almost past, I would say 10 years or so, even more than that actually. For more than 10 years, all this you can find in this place, drvrk.in, resources page, click on CA intermediate. All this you can download. It is downloadable. Of course, all this is even available in your institute material, in institute portal. Just it's from there. I've given the link and you can take it from any source, practice. But what is required is this approach, the process. So first ensure you're clear with analyzing financial statements. So first learn the ratio analysis DuPont. Then the same order, financing decision, long-term financing, long-term investment, short-term financing and investment, working capital, dividend decision. Exactly in the same order go through. Trust me, exam is a cakewalk and will be much equipped more than your exam requirement. And very simple, but no shortcuts. Everything, if you give adequate time, everything will fall in place. And I repeat again and again, at this level, how much of our time you can spend on every subject, not just finance alone. Next level, you have adequate foundation to go to next level. Else, hardly students, they struggle. Don't make that mistake. So at the foundation level, you learn mathematics, you learn statistics. Now, those who learn for exams, when you need it here, how many of you are equipped? But those are learned for learning's sake, for knowledge sake, and those are still in touch. Don't you think you'll make a better justice for the subject, for learning this? Exactly same way. If you now equip yourself with the right foundations, final will definitely be simple. So keep that also in mind, not just the exams alone. So usually people say, CA people are interested only in two things: before qualifying marks, after qualifying money. Nothing wrong. But to get that money, marks alone is not sufficient. So your exam scores alone will not help you. Something more is required. So, and first and foremost, ensure every subject you learn the way it has to be learned, get complete knowledge rather than just exam knowledge. Okay. Now this is for intermediate level, and all the sources which are mentioned, if you go through, you will definitely get more insights on this. I will share all that which I presented, you will get a better idea. Friends, now let's move on to the second agenda. Strategic financial management. Right. Friends, like in financial management or any subject, not just finance alone, any subject, you should have some prior knowledge, which I call prerequisites. So even here you need SFM, strategic financial management. So I put it as SFM. Now it appears same: statistics for finance, financial management, mathematics of finance. What's the coverage, exact coverage? I'll show you. But before that, I want you to take a look at this. This holds good. Whatever I'm showing is both for intermediate and final. And I have a YouTube channel, and in that I put a lot of videos on foundations for finance. Foundations for finance, lot of videos available. And what are the foundations we need? Financial statements, an orientation, how to learn it, how to analyze financial statements, particularly DuPont analysis, the mathematics you need for finance, time value of money, statistics for finance, and very, very relevant, particularly for final level, cost of capital. All these videos available on my YouTube channel. Again, I'll pass this on to the organizers. So click on the link, watch the videos, and that is how you must begin. With all this background alone, you can start learning finance, particularly strategic finance. Whatever I've shown is relevant for everyone, both intermediate and final, but the last two topics are more relevant for the final level. Now, let's see what is the coverage under strategic financial management. This is This is strategic financial management. Anyway. Now, firstly, friends, whatever the syllabus you have, new scheme I'm talking about, old scheme also, almost similar with small changes, broadly classified into 4 broad headings. One, valuation and value-based management. investments, international finance, and miscellaneous topics. So what I'm now showing is the coverage under each broad topic, and this will make you understand what should we learn in strategic financial management. And one thing I feel bad to say, of course, all these are topics in a study material, but the way it is organized, unfortunately, not appropriate. So going in the order in which it is given study material, friends, you don't get adequate knowledge on the subject, you don't get confidence. That everything is good, simple, everything you should learn. So what order should you learn? So please follow this. So as I said, broadly, these are the 4 headings. Firstly, under valuation, value-based management. These are the titles, what you find in your study material in the curriculum. Given old and new syllabus, focus is new syllabus, but almost similar. So under this, you have a basic background. And what is this background about? What is strategic financial management? And what is strategic financial management? Simple. I told you earlier, what is financial management? It is nothing but managing financial statements. Friends, strategic financial management is managing financial statements with the ultimate objective of value maximization. Even though that is always kept in mind, but in specific, when we make decision to ensure that the value is maximized, it is strategic financial management. Obviously, it's an extension. So the first topic gives you everything about background, strategy, etc. What is value, what drives the value, all the background for it. Risk management, I'll just give a brief orientation a little later, but most important under this, corporate valuation and corporate restructuring, which includes mergers and acquisitions. So when it's a valuation and value-based management, so valuation, what you should learn is corporate valuation. And why should we learn? If the goal of the business is to maximize value, first we should know how to find the value. How much is the value? So corporate valuation. And after all the foundations, I repeat, after all the foundations, please ensure how to read financial statements, you are clear. Time value of money, all the mathematics, you are clear. Statistics, complete clarity. Cost of capital, all this is something you would have learned at earlier level, but please make an effort. And the cost of capital, what you should learn is beyond what you learned at intermediate level. And all these are not topics in the curriculum for, say, final SFM, but without that, you can't learn. You must. So first ensure valuation, corporate valuation, which is about how to find value. And you can understand this only after all that background is clear. Complete statistics, mathematics, time value of money, cost of capital. Only when you know everything, you can understand this. Else, mechanically may work something, but trust me, recent exams, Jan 21, November 20, they made it so tricky, so tricky. Excellent. I really enjoyed the paper, but it was so tricky. Only when you have strong foundations, you can address this. And till now, I used to always say, in SFM, time is not a constraint. You can have adequate time. But first time it was proved one time was not sufficient. Only those who have adequate foundations, fundamental knowledge could even understand the paper. So please ensure first all those foundations. Then corporate valuation, corporate restructuring. Friends, this is a weightage. And from where do you get these numbers? As I mentioned, section-wise weightage as per new scheme. And from past exam papers, that analysis I'll show you. So this is the first broad topic, and you must learn preparing with this. Now, what exactly should you learn under each topic? I'll tell you as we go further. This is the first topic. And the second broad category is investments. This is not the heading. These are the headings, but this is a broad category, and it includes security analysis, security valuation, portfolio management, mutual fund, derivatives. But I'll explain more what exactly it is each of these capture, what we should learn, I'll tell you. But this is the second broad category, and this 40 to 50% weightage. 40 to 50% of the paper is always this, but it is even more. I'll show you the analysis. And all this is common. Old and new syllabus is the same, friends. Only the weightage was slightly different, but is the same. Only one place, old and new scheme is different. So all those who have the distinction, nothing, everything same. Only few topics are replaced in new scheme. Otherwise, everything else remains. So this is the second category, and this is where you should give maximum time for preparation. And trust me, so simple. If you know how to approach it, cakewalk. So simple. But there is a sequence in which you must approach. If not, it's a chaos, it's a confusion. Then the third broad category is risk management, which includes forex risk, interest rate risk. So under this you have foreign exchange risk exposure management, international financial management. What all does it cover? I'll mention more in detail. Interest rate risk management. This is the third broad category. And friends, you can learn this only if you have background of what is called derivatives. And you can learn derivatives only when you have understood something called security analysis, security valuation, portfolio management. Without that, without background of this, you can't understand derivative. And without background of derivatives, you can't understand this. So can't start learning in any sequence. This is the sequence you must go through, and you will see each topic when you start. Whatever you need, you have already covered it, so you can easily go forward. Else, as I mentioned, it's a chaos and confusion. And this usually 20 to 30% weightage. And miscellaneous topics. This is only place where old and new syllabus is different. New syllabus, there are some theory topics. Currently, some of these topics have been removed. This was the original syllabus. So currently you have only securitization, startup finance, that's all. Other topics you don't have. Old syllabus, you have capital budgeting, leasing, dividend addition, etc., etc. But anyway, new scheme is the focus. So only 2 theory topics. Currently it's only 2, securitization, startup finance, that's it. Now, before we see what we have under each and what should we learn and what should be the focus, let me also show the past exam question paper analysis for strategic financial management. Again, what I'm showing is only for the new scheme, and May 18 the new scheme was introduced. From then 5 papers, 5 exams have happened, including the latest Jan 21, and this is a weightage, this is analysis. So again, everything is available in the place which I mentioned earlier, the resources in my website. But again, I'll share it to the resource people, I mean the organizers, you can have a copy. So broad 4 categories, and these are the topics under each. From each, how many theory marks question, how many problems, how much marks, and the total from each. From the latest exam, Jan 21, valuation value-based management, particularly corporate restructuring. What does it cover? I'll tell you just a little later. 30 marks, of which 26 marks is only on corporate restructuring. 26 marks, imagine. But you will see, very simple, very, very simple. But see the weightage. 42 marks was on investments, spread across stocks, bonds, mutual funds, derivatives, something. 32 marks was for international finance, forex risk, etc. 20 marks was theory. And first time so much questions on theory, including choice, 124 marks. This is including choice. Friends, November 20. So 124, can you see, friends, 53 marks. Yes, 27, 36. Can you see? The spread is equal. That is obviously investment, more topics are under coverage. So it is equally spread across all. Second. Is the screen visible now? Okay.
Yes, sir. Yes, sir. It's visible.
Yeah. So this number 20, this is the weightage. Investments, I want you to please observe. Though everything is important, I want you to get the weightage for each broad category. Next, November 19, you know, in 2020 May exams was now there, only November we had exams, November 20. Prior to that, November 19. Can you see the weightage, investments? Please have a look at all topics, but I'm showing for investments more specifically because that is where you have to give maximum time, and more the time you give, other topics hardly you need time. Take my word. November 18 and May 18. And again, May was another paper where there are a lot of questions on corporate valuation and corporate restructuring. Yet, trust me, so simple it is. Now, this is the analysis. As I said, you will get it, you can download it from where I showed you. Let's go for each of these. Friends, firstly, I gave a list of the foundation videos you must watch. I mean, not necessarily it has to be my videos. Please ensure you watch it anywhere or from any book you learn. Since these videos are made exclusively for CA Final SFM students, this will be useful to you. Don't start learning the subject without those foundations. So what all foundations you need? Please ensure first you have good background of financial statements, how to read financial statements, in particular DuPont analysis. Please ensure you know that. Then time value of money. Every minute aspect you must know. Whatever I presented there, please ensure the formula, everything by heart if need be. In fact, it's common sense, you don't have to by heart. And I repeat again and again, 95% of the formulae which comes in this subject is either from time value of money or from statistics. So if you know this, you tell me, trust me friends, you can give the formula yourself. You can, that simple it is. So then statistics for finance, cost of capital, what you should learn in statistics. This will tell you, but this is what you should know. Simple things I'll mention. If you have only one set of data, let's say marks in one subject, returns given by one stock for 5 years. You should learn how to calculate mean, average, how to calculate standard deviation, how to calculate variance, and how to calculate variance, standard deviation, and something called CV, coefficient of variation. How to calculate, this was the video, it's on YouTube. But most often what you need is two sets of data, for two stocks data given, two companies data given, two subjects marks given. Then you should learn for each set, how to find mean, variance, standard deviation. And for both the sets put together, you should know how to find correlation and how to make regression equation, and which involves calculating something called beta alpha. So much of statistics you should know, and know that much, absolutely enough. Anything required is taken care, other than one or two small extra topics. But so much, please ensure you first know. And my request, don't start learning the subject without this background, friends. In particular statistics, because all the other background adequately would have at the foundation level, one revision. But statistics at intermediate level, that's not the depth in which you need. But here, without statistics, half the subject can't be understood. So all this is the coverage. And financial management, what I mentioned, you should have the basic background of long-term financial decision, that is capital structure decision, capital budgeting, working capital management. Briefly, just have the idea. And what all you should learn under mathematics of finance, time value of money. All these are presented, but in short, first ensure the foundations are clear. But most important, friends, please spend adequate time for cost of capital. And please remember, none of these are part of your syllabus, but it will be presumed that you know all this, and only then topics are designed. So without this background, nothing can be understood. Matter of 1 day, 2 days, you can learn all this, but please ensure you do learn. So cost of capital, I'm not elaborating how to learn, what to learn, but just keep in mind there are two approaches for calculating cost of capital. Please ensure both are learned. And in particular, there's one model called CAPM, which you should learn as a part of it. Now, what is interesting, friends? This subject SFM, there's a team behind it. In fact, I feel happy to say, when 2016-17, when the process of building the new scheme started, one of the Central Council member from Bangalore also got me an opportunity to contribute to this. And this was the suggestion which I made. The theme either should be value-based management or risk management, and a blend of both is actually what you find. So this entire paper actually covers two things. One, how to manage or how to maximize the value of the firm, and how to manage the risk exposed, the firm is exposed to. So any topic you take is either relating to this or relating to this. And as you know, risk management is an exclusive topic you have. And just to give a small background, what all risk a business has, and you know, income statement, format of the financial statements, and always keep in mind entire financial management, not just entire financial management. Any management paper, any management subject can be learned just keeping financial statements. So if you look at financial statements, you will know what are the risks a business has. Friends, in relation to revenue, and revenue comes from what? From sales or service, which is related to market. So we have something called market risk in relation to revenue from operations. In relation to cost of goods or cost, operating expenses, we have something called operating risk, which is cost risk, fixed cost, if you remember. Then with regard to interest, we have interest rate risk. With regard to tax, we have legal risk. With regard to long-term source of funding, we have financial risk when we borrow. With regard to current liabilities, we have something called liquidity risk. When it comes to non-current assets, we have something called risk analysis and capital budgeting. Current assets, which include inventory, receivables, we have something called credit risk. When you extend credit, we have receivables, so credit risk. In case cash, if the cash what we have includes foreign currency, then we have forex risk and all other risks. So these are the risks a business entity is exposed to. How to manage these risks is the thing. Well, some of these you learn in SFM, mind you. Some of these you learn under strategic cost and performance measurement. That's on the paper you have. Essentially, the entire focus there is operating risk. Certain other risk you learn under corporate law, particular legal risk. So this not just SFM, whatever you have in final, directly or indirectly contributes to value management and risk management. That is the entire theme of all the subjects you have at the final level. Now, this is specifically what you should have. Second. And firstly, corporate valuation. Corporate valuation. Please start with that. After once you get the foundations clear, don't venture in learning the subject without this. Trust me, you should not. You will not. You can't learn. After a point of time, you feel you are not able to understand. But with all the background, everything will be simple. But go in the same sequence which I'm mentioning. Corporate valuation. Earlier, this was spread across the subject. It was not a specific topic. It was not an exclusive separate topic. It was spread across. But in the new scheme, they made it as a separate topic because of the focus that was required. And all these are the various methods of corporate valuation, which you must learn. And on each of these, there are questions in the exam papers. Each of these. Very good weightage and very interesting. In particular, discounted cash flow method. Please ensure you learn adequately. Every method, but in particular discounted cash flow method, because not only it is important for exams, but this method also will give a logical understanding of the entire subject. If you learn this method of valuation, many aspects of finance, you can easily get the connect, you can understand because this background will help you to understand. So first learn, and very good weightage, very interesting kind of problems in the exams. Some problems, small problem, just 4 or 5 lines, but you would not believe it. To answer the problem on valuation, you should have background of time value of money, you should have background of cost of capital, you should have background of DCA method of valuation and some other topics. Just a small problem. There's a kind of testing that can happen. So a deep knowledge, and please remember, like at intermediate level, format-based learning, formula-based learning won't help you. Every problem is unique, very different. Particularly, as I mentioned, this Jan 21 paper is an eye-opener. So these are the methods. This market value method actually was not there, but the latest study material of your institute, the latest, if you see, there's one more method on which problems have been added. So I mentioned it. So this is what you need. 2, corporate restructuring. Corporate restructuring. Friends, broadly you have under these 2 categories, financial restructuring and ownership restructuring. And what does financial restructuring include? It's all about designing and redesigning capital structure. designing and redesigning capital structure, and lot of variations. And in the recent past, questions on corporate restructuring is more on financial restructuring. You see the papers, you will see more on financial restructuring. Simple, trust me. If you have all the right background, brief introduction, common sense will help you to address all this. Was exact coverage when you look into the subject, you'll get to see. Ownership restructuring is about mergers and acquisitions, demergers, buyback, etc. But again, I mentioned only those which are part of what is prescribed in the curriculum, and particularly mergers and acquisitions. Remember, this is simple. Mergers and acquisitions, the framework, the kind of variety that we have, but again, if you approach it rightly, so simple, anything given in minutes you can answer. But if you don't know the background, you just think a format or a formula can go with an address, that's where we falter, things can go wrong. But this is another topic, and give more time on mergers and acquisitions and financial restructuring. How much? If you just can take past exam papers, which I'll show you where you can get it again. Take each problem from each topic and solve, that is more than adequate. Because exam paper particularly, every exam there's something unique, something different, something very different. So if you're able to address the questions in exam papers, trust me, you're prepared for any challenge. Friends, after you learn, and I repeat the sequence, first all the foundations, don't start learning the subject without that. Then start corporate valuation, corporate restructuring, complete detail, and you can understand corporate restructuring only when you know corporate valuation, because a lot of valuation aspect used in this topic. Once this is known, then you're ready with the first category, first broad area, which I could see average 20 to 25 marks in any paper. But friends, then comes next major category, investments. As I mentioned, this is not the heading in your curriculum, but this is the broad category under which many topics fall. Firstly, what should you learn here, friends? Friends, here we learn how to make and manage investments as an individual or as a business entity. If you have surplus funds, what do we do? Invest. Saving is different, investment is different. We invest. How to make investment and how to manage our investment is what you learn. That's the entire theme. Now, what should you learn here? And so I'm showing one flow chart. Every aspect of that is what you have in the curriculum. Whatever I'm showing is as per what you need. If I take investment as a whole, like what MBAs have, the depth is much huge and different. But I'm showing only what you have. So how to make and manage investment? First, we usually have to identify what I need from my investment. What are my goals? Once what I need from investment is clear, next comes where to invest. What are the alternatives? Now, though there are many alternatives, as per your curriculum, as per CA final syllabus, only 3 alternatives has to be considered: stocks, bonds, mutual funds. Stocks, bonds, mutual funds. So only these are the alternatives, though in reality we have other alternatives, but for you these are the 3. And in these alternatives, to choose, should you go for stock or bond or mutual fund? Or if it is stocks, which stock is good? If it is bonds, which bonds are good for investment? If it is mutual fund, which mutual fund is good for investment? So that is the next thing, choosing the best alternative. So under all the 3 alternatives, stocks, bond, mutual fund, what you learn is this: how to choose which are the good stocks for investing, which are the good bonds for investing, which are the mutual funds. So your syllabus or your material may not mention that, but whatever you learn, whatever you do is nothing but this. And as you know, let's say you have 10 lakh. You want to invest in stock. Will you invest entire 10 lakh in stock of one company? Does it make sense? No. So what should we normally do? Invest in bundle of stocks, which you call portfolio, or bundle of bonds, bond portfolio, bundle of mutual funds, or a mutual fund. But then the question is, how much money to put in which stock? How much money to put in which bond? That is called portfolio construction. And once you constructed a portfolio that is identified how much money to put, next stage is actual investment. But to make actual investment, First, you should know the functioning of stock exchange, stock market, everything. And after you invest, periodically you should evaluate how your investment is performing. Is it giving you what you expected? That's called portfolio evaluation. And based on your evaluation, either you revise your portfolio or hedge, protect your portfolio, protect. Now, friends, this is exactly the coverage in this. So, how to make investment? If it is stocks, how to select stocks, how to construct portfolio. If it is bonds, how to select which are the good bonds and how to construct portfolio. And this stocks, bonds, and portfolio construction, all these are covered under 3 headings: security analysis, security valuation, portfolio management. Those are the chapters you have in the study material. Those 3 chapters cover this. What is their coverage? I'll tell you. Next is mutual funds, exclusive topic. This mutual funds, how to select. This is exactly what you have. So we work problems, but with or without knowledge, what you're learning is how to select which is a good mutual fund. Then how to learn stock exchange functioning, etc. Earlier, when the syllabus was introduced by the Indian financial system, but now it has been removed, but a general understanding is good. Then how to evaluate portfolio. This actually comes along with mutual funds, but this is another requirement. You learn it as a part of mutual funds. In mutual fund chapter, you find this also. How to revise mutual funds, how to revise portfolio. As a part of portfolio management chapter, you find it. But most important, exciting and very, very interesting topic, and take my word, very simple topic, how to hedge portfolio. After investing, how to protect my portfolio from loss, how to see that I don't make a loss from my investment. And that's where we use derivatives. Hedging is protection. Derivatives. Now, this is what you have under investments. So each you learn stocks. So what I'm showing, you find it under a chapter called security analysis. And please ensure you go in the same order which we are discussing. And this is the only order which can help you to understand everything smoothly without any confusion. So investments always start with stocks first. First, how to select stocks. We have something called fundamental analysis. What is there involved, you will see. In particular, another stock valuation, why we need valuation. All that you'll understand. I don't want to elaborate. I don't want to teach the subject, but I'm just giving the coverage. And maximum weightage under stocks is on stock selection, under valuation. Especially again in the recent past examination, very different variety, very unique problems have been asked on stock valuation. Very innovative problems have been given. Stock valuation is one of the criteria. The value of the stock is one of the criteria for selecting good stock. Is it undervalued, overvalued, something decision we make? All that you will learn as a part of this. And that is called fundamental analysis, where on the basis of value, we identify which is a good stock. On the basis of trend, is the market bullish or bearish? Which stock is good? And that is called technical analysis. And technical analysis, very beautifully explained in the study material, but in exam weightage was less, but in the recent exams again, good number of questions asked. Very good question. So not something which you can neglect, something you have to spend time, but not as much as this part, stock valuation. And usually these are the 2 criteria. Fundamental analysis, technical analysis is the criteria for stock selection. But which technique should we adopt? Should I go for fundamental or technical analysis? Which is good? That we can understand with the help of something called efficient market hypothesis. So it's a theory which tells us, should we go for fundamental or technical analysis? And all this is part of the chapter security analysis. And recent exam, Jan 21 exam, the very first question was on this. And trust me, no student could answer it because even the study material is not captured. One small line, one word, one sentence explanation given, but on that a problem has been asked. So this is what you should always keep in mind. Once there's a mention of anything in the syllabus, in the study material, you can expect question on it. Whether study material has captured it adequately or not, you can always expect. Nobody expected a question on efficient market hypothesis. It's a very unique question. It's about autocorrelation, something called autocorrelation, serial correlation. But something which is covered, which is a part of your material, you learn it, but not as was expected, as was asked for. But this is stocks. I'm showing all this just to see that, just to make you aware. Please learn whatever I'm mentioning in the very, very same order. Stocks, this order. Similarly, after selecting stocks, what next? How to construct portfolio. And so 4 theories, all these theories, Markowitz, from Markowitz, Sharpe model was derived. From the Sharpe model, CAPM was derived. From CAPM, APT was derived. So in the same sequence, you must learn. If you see books, including your study material, random order they're given. No, it's a chaos. Learn in this order, everything about portfolio construction will easily understand. And what you should learn under all these 4 theories, under each theory you should learn firstly, how to calculate return and risk on every stock. When you take a stock, how to find return, how to find risk. For a portfolio, how to find return and risk. There's a first aspect. And every theory suggests how to select stock, how to construct portfolio. Learn that. That is what you should learn. And the problems are based on that. Now, this is the stock selection and portfolio construction. So under investments, this is what you should begin with. And if you learn this adequately, bonds, mutual funds are in similar lines. You won't need much time. So bonds, again, how to select which is a good bond, which security, fixed income security is good. So again, we have 2 criteria, value criteria, undervalued, overvalued, something we identify. So we should know how to find value of a bond, intrinsic value, which you compare with price in the market and identify. So valuation is one aspect you should learn. And returns, if you invest in this bond, what is the returns you can earn, which is another criteria for selecting bonds. So this is the 2 criteria in connection with selecting bonds. But if you want to make a portfolio of bonds, then you should know what is the risk in each bond. Is there a risk? So there is a concept called duration convexity. Again, the recent exam papers, interesting questions have been asked on this. All these were considered as neglected topics. Students many times used to take a choice. Questions won't come. And all those neglected areas, in fact, questions have been asked recently. So there is nothing which is not important, which is of a choice which you can consider. So how to measure risk, and keeping this risk, consider duration something, how to make portfolio, bond portfolio. Weightage is relatively less, but if it comes from which corner, you have a question you can't say. And every topic, if you feel, let me take a choice, then there's nothing for you to be prepared for. And no need to take choice. Trust me, everything is simple, friends. Trust me. With all the foundations and the sequence what I'm mentioning, nothing is difficult. Just you have to give right time and practice. And mutual funds, you should learn how to calculate something called NAV, and what is the criteria for selecting mutual funds, what is the returns, and how to calculate return depends on what type of plan the mutual fund is under, dividend payment plan, reinvestment plan, bonus growth. I mean, all this you would learn, but returns. And to calculate returns, given a mutual fund, you should know how to calculate net asset value. And how to assess the performance of mutual fund. There's a mutual fund performance evaluation, which is also nothing but portfolio evaluation, which I mentioned. So how to evaluate, how to find, is the portfolio doing good, doing what, giving what I want. So how to evaluate. Every mutual fund, as you know, is a portfolio. So how you evaluate a mutual fund? Exactly same way you can evaluate any portfolio. So under mutual fund, you learn all this. And once again, very good presence. You can't expect a paper on SFM without any of these topics, and everything will be questions. Only in what depth or in what aspect. On mutual funds, this exam, especially November and this exam, again, very unique question. Very unique. You can find it, I mean, not a big difficulty. And the November 20 and January 21 solved exam papers I hosted in CA Club India. You can download there and you can see the kind of this thing we have. Then portfolio revision, the chart which I showed, which I gave, would have given an idea after evaluating, either change your portfolio or protect your portfolio. How to revise the portfolio. And friends, this portfolio revision is the background to understand derivatives. If you know this well, derivatives is a continuation. You may wonder what is the connection. When you start learning derivatives, you would know. So learn this, and then derivatives. So essentially under derivatives, to begin with, under the chapter derivatives, valuation analysis, that's the name of the chapter. We should learn about only 3 items: forwards, futures, options. Forwards here is a basic mention, because forward, actually the coverage is more under international finance, but under derivatives, get an idea. But most we should spend time on futures and options, and what is it, etc. Of course, it's a very interesting topic for discussion. But under futures, you have to learn mechanism, Again, in the recent exam paper, the question that was given was on mechanism. So if you enter into future, what happens? How to calculate profit or loss, day to day, how to find. The mechanism was it. Then how to hedge, protect your investment, a stock or portfolio using futures. Again, interesting questions in almost every exam. And how to find price of a future. What is the purpose? Why we should find price? Everything there is a purpose. So broadly, three things: mechanism, hedging, pricing. Similarly, options, the third category of derivatives. What is options, the types, etc. How to hedge with options. And here there is one more interesting: trading strategies. Using options, you can make money very great extent. So what are the trading strategies which can, using options which you can make money with, and pricing. This is the coverage, and again go in the same sequence. First get an idea of forwards, then futures in detail, and then options. And to understand futures, we need the background of portfolio revision, which I mentioned earlier, because it's an extension that you get here. Now, we should spend more time because this derivatives, as I mentioned earlier, is the background for the future topics. Interest risk management, international forex risk management, everything, it is derivatives which you make use there. Then, this is all the second category, investments. So stocks, bonds, mutual funds, derivatives. But under each, what all, and which are the topics mentioned in your study material which comes under each category I mentioned. The third category is risk management. So we can say international finance and risk management. First, international finance. There are two major topics under this. One, foundations, forex risk, forex, foreign exchange risk, and how to hedge foreign exchange risk, and international financial decisions. Now, these are the two broad categories, topics under international finance. Now, first category, forex risk. You have to learn all the basic concepts, calculations, terminology. I'm sure most of you would have come across all this and you would have learned. But what is essentially is two things: how to estimate the rate of a foreign currency on a future date. Let's say we export $1 lakh worth of goods to our customer in US. He will give us $1 lakh after 3 months credit trail. So today dollar is, let's say, 72 rupees. How much it may be after 3 months? If it is more than 72, for us it's a benefit, because we thought we'll get 72 as per today's rate, but we'll be getting more. Excellent. But if it is to be less than 72, it's a risk. It's a loss for us, which is what we call transaction risk. But to know is there a risk or not, first we should know on a future date, after 3 months, after 6 months, after 1 year, what is the rate of the foreign currency. It's only based on that we can identify, is there a risk? If so, then how to take care of the risk and how to estimate that. Hence, all these are the theories for that: PPP theory, IRP theory, Fisher's, etc. So these theories tell us on a future date how to estimate the rate of a foreign currency. And based on this, we identify is there a risk or not. If there is a risk, transaction, translation, economic. But in SFM, what we learn is transaction risk. We learn translation risk in part of accounting, financial reporting, the accounting standard which deals with foreign exchange. But in SFM, what we cover is transaction risk. How to cover it? Hence, all these other techniques: forward, futures, option, money market, currency swap. So unless you have learned adequately under derivatives, you can't understand. Same, simple. Derivatives is known. Take my word. And here, you hardly need 1 hour for each of these to understand how to use it for hedging. Just an extension. But that's not clear. Foreign exchange is not an independent topic to be learned. Now, this is one topic you have under international finance. The other is international financial decisions. That is international financing decision. Financing. So from outside the country, from where to get the funds from. International capital budgeting. So investing in other countries, whether a foreign company investing in India, Indian company investing outside, how to make the decisions. So we have home currency approach, foreign currency approach. In recent exam paper, this was a major question that was asked. And international working capital management, netting, leads and lags. And recent exam, there was one question on bill discounting, which is a part of this. All these are very neglected areas. Hardly there is, but questions appeared in the recent exam papers. So international finance, these are two broad categories: forex risk and risk management, and international financial decisions, which is all this. Of course, we also have interest rate risk. That is because of fluctuations in interest rate, the outflow towards interest payment keep varying. So if there's a difference between expected and actual cash flows, that is called risk. And because of fluctuation, if it is a floating rate loan, the change in interest rate, the interest amount what you have to pay will keep changing. It may be more, it may be less. It is a risk. How to take care of this risk? So we have interest rate swaps, forward rate agreement, interest rate futures, interest rate option, caps, floors, collars, swaption. Simple topics if you have background of derivatives. And again, recent exam paper, you can see simple, interesting question has been asked. So nothing can be neglected. But for all this, the background is derivatives. And for derivatives, the background is portfolio construction, portfolio management, portfolio revision. Finally, miscellaneous topics. This and this, as I mentioned earlier, this gives foundations of what is there in SFM. This I mentioned, what are the risk a business has and how to take care of it. But two other small topics, hardly this thing, weightage may not be much, but coverage is there. And since only few topics and theory has to be asked, a lot of questions have been asked on each of these, but again, simple for that matter. Friends, this is the coverage and this is what you need. So SFM, the smart way to approach for exam is to learn the subject smartly. And learning the subject smartly involves firstly equipping yourself with the foundations, two, going in the exact sequence in which it has to be learned. You try changing the sequence and learn, you will see it leads to confusion. But go in the sequence in which I showed you, friends, you're safe. Now, intermediate or final, these are some small points you should keep in mind. First and foremost, this is what I always say. I always see many students in a big hurry when in classroom, when I teach. They hardly read the problem, they want solution. And obviously, they end up in making mistakes. So we always say a problem well identified is off solved. So first and foremost, in exams, take time, adequate time to read the question carefully. Because as I said, Institute is known for making questions very tricky. One word change, a small change in one word, entire approach can be different. For example, one question on mutual funds, I'm just giving a simple example. There's a question relating to dividend reinvestment plan. Every time there's to give, if the annualized return was so much, so there's some question. 2-3 times same problem, a similar problem is happened in exam, and where the term used was annualized return. But one exam, same question, instead of annualized return, they used the word holding period return. And that one word was enough for you to go wrong, because your entire approach should be different. So please read the problem very, very, very carefully, friends. And this is one common problem I find among students. Knowledge on English is not adequate. And this subject, finance in particular, even for that matter, cost accounting, IFRS, anything for that matter, unless you have adequate book language, book English language, you don't have to have communication language, it doesn't matter. But as long as you're familiar with that book language, fine. So please ensure first you improve upon your language skill, particularly English. Read as carefully as possible. Take my word, if you practiced enough, if you read the problem, you hardly need time to solve it, because most problems in SFM, particularly FM or SFM, problems may be big, but solution will not be much. It's about how smartly you present it for that matter. So you won't take time to solve, but first you should know what is required. And for that, you should spend adequate time to read the problem carefully. Please do that. Two, I did mention most of 95% of the formulae is either based on time value of money or statistics. Know that, as I said, you don't have to by heart. You can derive yourself. But there are some areas, friends, where there's a confusion. For example, standard deviation. Throughout the subject, you keep calculating standard deviation very, very frequently. But to calculate, one major blunder in your study material and exam system is the formula taken is wrong. So it will be shown as divided by n. But technically, friends, the formula, accepted formula is by n minus 1. Now, why I'm mentioning this? Students who know correctly, who know what is correct, they use that. But there are others who blindly go with the institute material and and also, of course, present it. Now, what should you do? So, for example, standard deviation, and this should be the formula minus 1. In case you're given population, entire population, then we should use this formula. I'm not elaborating, I'm just mentioning. But for everything in the study material, in RTP, exam suggested answer, you find this formula only, which is wrong. Technology is wrong, but unfortunately find this used. This is just one example. Like this, we have many cases. Now, what to use? Friends, you don't, the study material and all is not a Bible. I'll later share big list of reference books for the subject. And these are books used internationally in all the B schools, including Harvard B School, etc., which gives the correct formula which should be used. To over design the material, I don't know what is their background, but all these are books used internationally everywhere in the world. Obviously, what they give should be correct, is most acceptable. So, when I have a dilemma, you know what is correct. I hear many students saying, I know what is correct, but if I write as in study material only, I get marks. Friends, all that is bogus. There's no such thing. Marking is purely based on our knowledge. Just because you reproduce as it is in study material, you won't pass. Please don't have such notions for that matter. So you know what is correct. There's a blunder that has happened. Quite often, many of us have written, correction has not happened, whatever the reason. I don't know what is behind, but like how I showed you standardization, many formulae find differences. Go with right formula rather than wrong formula just because it's mentioned in the syllabus. And recently, some from the institute, one of the board members was showing in the exam scheme they provide, if it is worked as per study material, if it is other formula, marks are given for both, because in the study material it is so, marks has to be given, but students who are done correctly, you use correct formula, correct approach, marks can't be denied. It's a blunder, they can't do that. So just because it's a material, you don't have to follow a mistake. And I can show you n number of mistakes in the material, suggested answers, everything. You know what is right and go with that without any doubt. So will I get marks? No, that should not be a criteria. At final level, that is not what you should be thinking about. So use the correct formula rather than what is in the material. Most cases it is same, but where you have a dilemma, go with that. 3, friends, as an if I were the examiner, well, correctness of the answer is one thing. How it is presented obviously is a criteria for me, correct? So if you present it very chaotically, obviously I might not get impression. So even though, you know, see a value mindset, considering the result has to be, restricted, all chances they may wait for opportunity to put down marks. So I don't know, I'm just guessing it. It's not any blame or anything, but possible. But for sure, the presentation is good. You definitely get what you deserve to get. So please ensure you present. And for that, beforehand, you should practice. If this is the question, how should you present? So generally, I see students just going through the subject and say, oh, I know the answer, I know the answer. But when you answer it on a paper, you will know what are the difficulties. And any kind of question, if it comes, how should I present? How should I write? How to sequence it? How to make a table? Practice it beforehand, because presentation is the key to get good marks in the exams. And everybody has knowledge, but definitely those who present well definitely get better. Obviously, if you presented a wrong answer, you can't expect. Definitely, we presume you present right answer, but present it neatly, appropriately, smartly, and you don't have to elaborately write. I remember seeing one comment given by in the commentaries. You can see that in your institute. This thing, 2-mark question, almost 1.5 page. 4-mark question, almost 1.5 to 2 pages answer has been written. Expected, friends. There's a question for 16 marks, and the solution you can present it either elaborately or, trust me, in 4 lines you can show the solution, just 4 lines, and present it that way. You're appreciated, marks are awarded. Just because you take more space, that's not what examiners consider. Another challenge when it comes to SFM exam, friends, for many topics you need some statistical tables. present value, annuity, etc. Okay, but we need normal distribution, exponential distribution. And this is one confusion and problem in exams. Some papers, they give all the values, the statistical values will be given, but many times not. And I've seen students, even though they know how to solve, because they don't have the tables, the statistical tables and the values, they're not able to proceed. So normally this is what I suggest. You carry the set of tables. At the end of your study material, you find the table, make a photocopy, take it, don't write anything on it. Don't write even your name, nothing. Just take a copy, nothing, not even a pen dot. When you get into exam hall, hand it over to your invigilator, requesting if you need, you will take it. And by and large, invigilators are instructed, because they'll be instructed. Tables are given, it will be mentioned the tables are being distributed. If not, so in case you have a need, you can always borrow and write it, so you can complete. So this is one problem which I normally have seen students facing. This is what you can do. But please remember two things. One, friends, the core expectation on an examiner at final level is the decision what you make, the inference what you draw. Just because you solve a problem, it's not adequate. You should end with a conclusion, a suggestion, a decision, an inference. Only then it's complete. And it's your decision-making ability, your reasoning, analytical ability, which is awarded marks, rather than just your answer. You just get a particular answer, a number, fine, but don't expect that alone is appreciated. What is expected is your ability to analyze things and decide. So when that is done, then even if your presentation may not be adequate, your analytical ability will definitely be awarded with good score. And at final level particularly, the subjects, any subject calls for integrated knowledge. So in SFM, unless you have good knowledge on taxation, some of the accounting standards and concepts, some of the cost accounting, marginal costing, so many topics, everything is embedded and you apply it here. Similarly, in other papers, you apply something of finance. Remember, few exams back, in financial reporting problem, in financial reporting paper, there's a question on EVA, and that involved calculation of WACC, weighted average cost of capital. Nowhere in FRU read it. So if you learned it appropriately here, then you can use it there. So this is another expectation. So no subject is independent, everything is integrated. When you keep that and learn, it becomes easy. And normally I suggest always first learn SFM with all the background which I mentioned. So whatever you need for other subjects, you can easily carry from. Friends, this is certain points what I wanted to mention, and everything that is showed, I'll pass it on, and I'll see that it's made available to you. Any questions I can take? Please ensure end of it. I repeat what I mentioned earlier. Don't prepare just for exams, friends. Exams will happen. You will definitely pass. But what after you pass? I sit in many company interviews, particularly finance profile, I sit for interviews. Usually, we have to prefer MBA because they have all this background. And you learn it too. But you learn it for exams, so you forget it. You don't know the application part of it. They come with that background. But trust me, a chartered accountant can do better justice for a finance profile than others because of other background you have. The due diligence, the accounting, the tax background. You can definitely do a better job. But it's in your hands to go adequately prepared for it. So prepare well. Trust me, this is one area where you can make very huge career. Such excellent opportunities exist globally. Your taxation knowledge can help you only in India. But finance, anywhere you can make a mark if you have the right background, and you will see the difference. So I thank the opportunity. I will display my website address again. So website www.drvrk.in. There under resources, find two headings: CA Intermediate, CA Final. So under CA Intermediate, you find RTPs and suggested answers for many exam papers. Similarly, CA Final also you find not RTP, old scheme and new scheme, suggested answers for all exams till date. Old scheme at least from past 10 years or so. New scheme from the time it has started. Everything you find, can take a look. And the video links, I will share it with the organizers. in turn they will give it to you, or you can go to my YouTube channel. You can just type V Rajesh Kumar YouTube, and you will find. But what you should do is watch in the same order which I displayed, so that you can get the sequence, else it may not be useful to you. So I thank the organizers, Mr. Manjunath, good friend, though it's a long time since we met and chatted. Thank you so much for this opportunity. Ms. Lakshmi, Mr. Sudeep, and all others from the Institute. It's always a pleasure to be associated with all the events of the Institute. Thanks for the opportunity, and thank to all the participants for your patient listening. Thank you so much. Over to the organizers.
Thank you, sir, for the in-depth coverage of SFM and FM, and we'll definitely go to your website and also see all the resources. And I think the best part for me was on how do I learn it, the pattern. So that is something that I'll keep in mind. Manjunath, sir, do you want to say a few words?
Yes, Lakshmi. Yeah. Mathematics and statistics are two subjects which usually a CS student would have not considered important, but only due to application of the concepts from these subjects, they would be struggling to non-application of the concepts from these subjects. They would be struggling to clear their CA intermediate and CA final. And another thing what sir was emphasizing on was spend more time on sharpening your basics, which would help you to get through this SFM paper and even first group of CA final or even CA final exams as such. So that impact it has on if prepared well. So that is what I wanted to tell. So thank you so much, sir, for spending your valuable time with us and then sparing so much of insights on the subject and then how to prepare for the subjects as such, and then not only for exam purpose but even post exams and then for our career. Thank you so much, sir. Over to you, Lakshmi. Yeah.
Thank you, Manjunath, sir. I would like to propose the vote of thanks on behalf of Bangalore branch of SIRC of ICAI. I would like to thank Rajesh sir, Dr. Rajesh sir, for giving us this wonderful knowledge, and I'm sure we will inculcate all your points. I would also like to thank our chairman, BT Shetty sir, for enabling us to conduct this session, and SICASA chairman, Shri Shivram Bhatt sir, and also the co-opted chairman Manjunath sir and Sudeep sir. I would also like to thank the audience for being a part of this session. Thank you, everyone.
Once again, thank you so much, sir, for your time, and then thank you, Lakshmi,
Mr. Manjunath. Thank you,
Yes.
Ms. Lakshmi. Thank you so much.
Yes,
I look forward to meet you all sometime soon. Thank
Sure,
you.
sure.
Thanks for the opportunity.
Thank
Thank you.
Yes, thank you.
Thank you. In the chat, I put my email ID,
Yes,
student@drwerker.in. So
Yes.
I'll send the material, but in case any student need, they can mail me. I will send
Sure,
all
sir.
these presentation to them as well.
Yes.
Right, sir. Right, sir. Thank you so much.
Thank you so
That's
much.
So kind of
Thank
you.
you so much,
Yes.
Ms. Lakshmi. Thank
So
you.
kind
Bye.
of you.
Bye. Good day. Bye.
Bye.